Hi, everyone. I'm Kurt Roney, Professor of Management here at the Tillman School of the University of Mount Olive. I should say the Tillman School of Business at the University of Mount Olive. I specialize in strategic management and international business. In this video, I'll discuss the business of PepsiCo, Inc., a large producer of beverages and snacks from an international perspective. Most of the slides that I will use in this video were prepared by my undergraduate and graduate students in classes on strategic management and international business. They demonstrate the hard work and excellent results of many teams in those courses. Before we begin, I'd like to offer you a couple of suggestions. First, this is a long video. I suggest that you view it in parts rather than viewing the whole video at one time. In my course on international strategy, students' teams must follow a required outline. And this video will follow that outline. It is on the third slide. As you will see, the review will be in 5 sections. You can take a break after any section and be able to return without losing the flow of material that is covered. However, I recommend taking a single intermission after section 2. Second, print the PowerPoint slides that accompany this video. Then take notes on the slides in order to remember the most important points and to do well on the examination that will be given on this case. I would print the slides with 4 or 6 slides or images per page in order to save paper. If you print on 2 sides of each page, paper requirements won't be too bad. But you still will need 10 or 11 pages because there are a lot of slides. Let's take a break now so that you can print the slides. Just stop the recording and start again when you have printed the slides. All right. For those of you who printed the slides, you're all set. For those of you who did not print the slides, I hope you have photographic memory. Well, let's get going. I'll bring the PowerPoint slides up and we'll start this review. And there they are. Again, this little slide simply demonstrates what I mentioned earlier, that these slides have been made, most of them have been made by my students. And I've appreciated their hard work in preparing and presenting numerous assessments of multinational enterprises in my courses on strategy and international business. Here's that outline that I mentioned earlier. You can see that it's in 5 parts and there are several subtopics. You could print this page and just check off the topics as we move along. I think just about every one of them are covered, although in the real world, in my classes, some companies lend themselves more or less to some of these topics and some subtopics than others. I've tried to follow this outline very closely and comprehensively in order to demonstrate how to examine each of these topics. But in the real world, when we're looking at different companies, some lend themselves more to some particular topics and issues than other topics. So here we are on the first topic, which is a background of PepsiCo's products and its history and its financial trends. The purpose of this section is simply to acquaint everyone with the company and its general characteristics. Whoops. Let's see. Yeah, here we are. The blue dots on the map in front of you simply represent where the countries where PepsiCo does business. They are not meant to identify cities. For instance, in the United States, the blue dot looks like it's probably somewhere around Kansas City. In fact, PepsiCo's headquarters are in New York City. On the right, you can see something rather interesting, and that is that PepsiCo has 22 different brands that generate more than $1 billion of sales. So this is a real big company with really big brands. And I think if you look at some of these brands, you may be surprised that PepsiCo is engaged in so many different brands. Most people think of PepsiCo as the producer of a soft drink. Many don't know that PepsiCo owns Frito-Lay, which happens to have been one of my clients when I was an internal consultant at PepsiCo. Rarely do I find people who know that PepsiCo owns Quaker Foods or Tropicana. And so we'll find that PepsiCo has quite a variety of products and brands. Another interesting fact that you see on the slide is that PepsiCo does business in over 200 countries around the world. It is very multinational. Here are some of the top brands that PepsiCo makes, in fact. A lot of folks would be surprised to learn that PepsiCo owns 7-Up. It bought that product from, I believe, Seagram's, but the U.S. Justice Department felt that it would violate antitrust laws. It would limit competition if PepsiCo acquired 7-Up in the United States. So PepsiCo agreed to buy the international operations of 7-Up. So in Europe, where it's headquartered, you would be able to obtain 7-Up as a PepsiCo brand, and so forth. We'll get into all these various brands that you can see on the picture as we go through this review. And it is interesting to sort of look at this collection of products from one particular perspective, and that is the perspective of health. Mrs. Indra Nooyi, the chief executive of PepsiCo, has been well aware that there have been health concerns about soft drinks and snacks. And those are the two products that PepsiCo makes. So she developed a concept called good for you, better for you, or fun for you. And actually, the way to think about them is in reverse. Fun for you are the products that make you fat and make dentists wealthy. They're the usual products that you think about when you think about beverages and the kind of beverages that we sometimes call soft drinks and snack foods. But there's a category that is good, is better for you, and they simply are lower in sugar and lower in fats, lower in cholesterol. Maybe a good way to say it is they're not bad for you. And then finally, there is a group of products that PepsiCo makes that are actually good for you. One example might be Tropicana, orange juice. Quaker Oats would certainly be another. But as we go through this review, you will find out that PepsiCo makes a large number of products in each category, although I must confess the largest one is the fun for you category. But PepsiCo's moving fast to change that, and its good for you and better for you categories have been growing steadily as proportions of PepsiCo's total sales. So here, in fact, are the fun for you products. And like I say, they have a couple of things in common. They make dentists wealthy, and they help you gain weight, as well as maybe atherosclerosis. Anyway, these are the fun for you products, and they're the sort of products that you would expect a company like PepsiCo to make. These are the better for you products, and they're simply made with less cholesterol, less fat, less sugar, and so forth. And then there's the good for you category, and PepsiCo's made some real strides in this area. Of course, Tropicana you're familiar with, and so are you familiar with Quaker Oats. You might not know that PepsiCo makes Gatorade, which is a sport drink. And in fact, even since this slide was prepared, several other products that are good for you have been developed, and we'll talk about those as we move along. So PepsiCo's history began right here where the University of Mount Olive is located, or not too far from it, in New Bern, North Carolina. I'm making this recording shortly after Hurricane Florence moved through North Carolina, and it happened to do a great deal of damage in New Bern. New Bern is not on the North Carolina coast, but it's close to it. Anyway, at New Bern, there was a pharmacy and a pharmacist whose name was Caleb Bradham, and he developed a product that included pepsin and cola nuts. Frankly, he was well aware that Coca-Cola was a very popular drink, and he developed this drink after Coca-Cola already existed. By 1903, Bradham had registered his trademark, and he moved from the pharmacy to a warehouse where he started to produce the product in earnest. There were some legal challenges to Coca-Cola and some other drinks because they had, one of them had cocaine in it, and there was concern about that. But PepsiCo or Pepsi-Cola did not have anything offensive in it, and it passed that test. At the time, Coca-Cola was priced at 10 cents per bottle, in that famous skirted bottle, you know, that sort of has these twists in it. Well, by that time, PepsiCo and Pepsi-Cola had found a smart guy to run the company, and I'm going to tell you a story that I heard simply because I spent some time at PepsiCo. I don't even know if the story is true, but I think it is. In any event, back before plastic bottles and aluminum cans, my grandma would go to the grocery store and she would buy milk and soft drinks in glass bottles. And she would pay a deposit on those bottles. That part of the price of the beverage or the milk was a deposit. And when she brought the bottles back to the grocery store, she would get a refund on those bottles. And the bottler would, when the bottler delivered the product to the grocery store, would pay the grocer for those bottles. Essentially, the bottler made a deposit as well. Some of those bottles were taller than the Coke bottle, and they were used to deliver beer. And a lot of beer was consumed. So the folks at PepsiCo decided that they would buy those bottles for a little bit more than the beer company, and they would clean them off, take the paint off, and use them to and fill them with Pepsi-Cola, which drastically lowered their costs of production. Consequently, whereas Coca-Cola was charging 10 cents a bottle, Pepsi-Cola could charge 5 cents per bottle. And if you can see here, that's what the bottle top looked like. It bragged that it was just 5 cents. And in fact, the very first media advertisement in American business history was developed and broadcast on the radio by Pepsi-Cola. And I think I'll take a little drink of coffee here. And then I will sing that jingle for you. This was the very first media advertisement in the world. It goes like this. Pepsi-Cola hits the spot, 12 full ounces, that's a lot. Twice as much for a nickel too. Pepsi-Cola is the drink for you. Nickel, 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 nickel. Well, that's it. Maybe Michael Jackson could have done better, but that's the jingle anyway. And Coca-Cola was in a 6-ounce bottle, and these beer bottles were 12 ounces. So Pepsi-Cola hits the spot, 12 full ounces, that's a lot. Twice as much for a nickel too. Pepsi-Cola is the drink for you. And it sold, boy, that really did it. Because this was at a time when the U.S. economy wasn't doing too well. As a matter of fact, it was around the time of the recession, and Pepsi-Cola was actually considered to be the drink for poor people. And on the other hand, when the war came along, Coca-Cola, that was run by another smart guy, and the president of Coca-Cola went to General Eisenhower, who was the commander of the forces in Europe, and he offered to General Eisenhower to supply Coca-Cola wherever our people in uniform were. Eisenhower was just delighted by that because he wanted to make the troops happy. He said, "What can I do to help you?" And Coca-Cola said, "Well, among other things, you could lift the sugar rations so that we can produce more of our concentrate." And so Eisenhower went to President Roosevelt and got permission to help Coca-Cola build bottling plants all over Europe, and before it was over, Japan and Africa. So the result was that Coca-Cola became the dominant international beverage then, and remains so today. But Pepsi-Cola has undertaken in its strategy to challenge Coca-Cola in many nations, and it is now very much engaged in an international strategy. Well, enough of that. Let's move on. So here we have a little slide that simply summarizes the two arch rivals. The competition between the two of them has been called the Cola Wars. As you can see, if Pepsi started in 1903, this thing's been going on for more than a century. Coca-Cola had to change its strategy a little bit because it became illegal to put cocaine in a beverage. It did that and continued to thrive. And Robert Woodruff, who was this guy who was so smart at Coca-Cola, simply did wonders with the brand. Pepsi had its work cut out for it. And as you can see, the second bullet on this, on the Pepsi side of this slide, indicates that during the Depression, Pepsi was known as the drink of the poor. And in fact, it wasn't just the drink of the poor, it was poor itself and went into bankruptcy 2 times before it finally got its feet under it. By the way, if you want to hear the way that jingle actually sounded on the radio, you can use that little URL, the address on the bottom bullet. If you copy that and put it into a browser, you can hear the jingle the way it sounded. Probably sounds a little better than I did. Okay, so the another important factor in the bottled beverage industry is the bottler itself. Over time, it just didn't make any sense and became unaffordable for Coke or Pepsi to have bottling plants in every city. I mean, the capital is just unattainable. So this little slide just summarizes the evolution of the biggest bottling company in PepsiCo's history, maybe the biggest one ever. And it was eventually became known as Pepsi Bottling Ventures. As you can see, it even owned some franchises in North Carolina, where we're located here, and serves something, has 20 facilities, serves over 8 million consumers. As we go through the remainder of this review, there will come a time when I'll mention that both Pepsi and Coke have, first of all, promoted the growth of their bottling, of their franchised bottlers. Then, when there was a risk that the bottlers might begin to produce products other than their own, each company bought up or bought back the franchises of some of their largest bottling companies, and then more recently have begun to spin them off again. So this has been sort of a pendulum back and forth. But right now, both PepsiCo and Coca-Cola own some of their large bottlers, but by no means all, or even a large portion of all the bottling assets. Well, in 1965, PepsiCo merged with Frito-Lay, and I might add that that's about the time I arrived there. The merger was what we called a surviving merger. Pepsi-Cola was the survivor, but this guy on the right side, Herman Lay, he was one smart dude. As a result of the merger, he became chairman, but not chief executive. The guy who ran the company, Donald Kendall, at PepsiCo, became the chief executive. So Kendall had to do all the work. He was chief executive when I was there. And Lay sat back in his office at Dallas, Texas, making tons of money. Of course, he'd already made tons of money from the merger because his stock was worth a whole lot. Anyway, he first formed his company, Frito-Lay, in 1961 when he merged his company, Lay's, with Fritos. And you can see when each company was formed on this slide. So Frito-Lay at Dallas, Texas, which is where I used to go visit them. Every week I would go out to the airport in New York, and I would take a flight to Hobby Field, because there was no Dallas-Fort Worth Airport then. That's how long ago it was. But in any event, this was obviously a great combination. I might add there was another reason for combining PepsiCo and Frito-Lay, and the reason was Joan Crawford. She was a famous actress, and she was married to the then CEO of Coca-Cola, and I'm sorry, Pepsi-Cola. And when the merger was done, after the merger was done, her husband died, and she inherited this very large amount of stock, PepsiCo stock, and apparently made it known that she wanted to have a voice at the board meetings and pretty much, make serious decisions. And her decisions apparently did not inspire great confidence of the other directors. And so when the merger with Frito-Lay was done, yeah, and I've got my timing off a little here, Pepsi-Cola's CEO prior to the merger was married to Joan Crawford. There we go. And she was an irritation to the board. So when the merger with Frito-Lay was done, Ms. Crawford's stock was diluted. That is, she had the same amount of shares, but there were more shares now, and she didn't have the same influence and couldn't cause as much difficulty for the board. And so the rumors are that part of the reason for merging Frito-Lay with Pepsi-Cola, in fact, was to dilute Joan Crawford's shares. Please pardon me for not getting that right. By the way, I want to make it clear here. I have no idea whether that story is true or not, but it's the sort of thing that does happen with mergers. And I used to do quite a lot of mergers and acquisitions in my consulting career. And so again, the folks that I got the rumors from, I think, knew what they were talking about. So I'm inclined to believe that rumor, but I don't know whether it's true. Okay, here's a timeline that sort of just traces the history of PepsiCo. And you can see in 1965, Pepsi-Cola and Frito-Lay merged. And then along this timeline, you can see numerous significant events. For instance, the 7-Up deal occurred in 1986. In 82, Pepsi-Cola made its first foray into China. But it entered Japan the year after the merger and Eastern Europe. So I got those out of sequence. When I was there, Donald Kendall, by this time, did not look anything like that picture that I showed you a moment ago. Instead, he looked like a diplomat. He was a little heavier, and he had white flowing hair, and he just looked like a diplomat should look. And he went to Russia, the Soviet Union, and we were not on good terms with the Soviet Union then. But Donald Kendall made a deal to sell PepsiCo in Russia and to build a bottling plant there and to get Russia into the bottled beverage industry. When that happened, that was a big deal. It was widely publicized. I might add that since then, Coca-Cola has gained a larger share than PepsiCo. PepsiCo now is making a comeback, and it's making large investments. I was in Russia just recently and saw one of PepsiCo's large facilities. Didn't go in, but I saw it. Anyway, in 1990, the year after the Russia foray, PepsiCo acquired a large maker of cookies in Mexico called Gamesa, and so on. You can see the acquisition of Tropicana for a big number, $3.3 billion in 1998. And that product was then taken to India in 1999. You can see that in 2001, PepsiCo bought Quaker Oats for $13.8 billion. Why such a large price for an oatmeal company? And the answer is that oatmeal company owned Gatorade. And by that time, PepsiCo was starting to figure out that there were health concerns with this product, and that it was going to be necessary to do something about that. And eventually, PepsiCo became the leader in non-carbonated beverages with Tropicana and Gatorade, and it's the product that it developed internally called Aquafina, which is just bottled water. But Aquafina sold in larger quantities than Coca-Cola's Dasani brand. Danone, a Nestle company, sold more than Aquafina, but at least PepsiCo sold more water than Coca-Cola did. And you can see then in 2010, things start to happen with bottling groups. You can see that PepsiCo started to buy a couple of big bottling companies. And in the same year, PepsiCo made another move into Russia, and it bought the controlling interest in Wimbledon, the largest dairy products producer in Russia. And again, while I was in Russia, I confirmed there it was, along with a lot of other PepsiCo products. So PepsiCo more and more has become international. You can see that in 2011, it did a deal with the Tingyi Holding Company, which is the largest food and beverage company in China. And now Tingyi is the designated master bottling company for PepsiCo, and it makes the concentrates and so forth. It is essentially PepsiCo in China. Insofar as distribution is concerned, PepsiCo has a large research and development operation in Shanghai, and we'll get into that later. Most recently, PepsiCo has introduced this rather amazing beverage dispensing machine. Have you seen it? It can combine flavors in all sorts of ways. Apparently, it can produce over 1,000 different mixes of flavors, depending upon what interests you. So that just gives you an idea of the history. There's frankly a lot left off this timeline, but I think you kind of get the idea that PepsiCo has grown through a series of strategic moves, of acquisitions and mergers, and continually look for opportunities where there was market opportunity or growth and greater growth potential, and then acquired a strong company in that growth area. PepsiCo has been very much an acquirer of other companies. Okay, and here in fact is Gamesa that I mentioned earlier. You can read a little bit about it and where it's located, but you learn just as much from the pictures. These people make cookies. Did you know that PepsiCo made cookies in Mexico? And in fact, the products are sold in Latin America all the way down into Colombia, where they have Gamesa has a plant. Aquafina is another product that I mentioned. I'm going to show you from time to time illustrations of PepsiCo products simply to illustrate the departures that were made from the norm. So this happened way back in 1994, but the product on the right is actually sold in other countries than the US in cans. But bottled water is a big deal all over the world. It's even bigger in India than the US. Here we see a couple other big deals. The picture on the left is a picture of some Wimbil Dan product. That company in Russia included in its dairy products is baby formula, of all things. You can see that in 2010, Pepsi acquired AMP energy juice, and that was a big deal. I'm sorry, that wasn't an acquired product. That was a product developed in PepsiCo. Down below, you can see the Chinese package of Lay's potato chips, and there's mention here of that Tingyi deal. In 2011, PepsiCo acquired Maybell, which is another producer of cookies and snacks in Brazil. So you kind of get this snack food thing that was started with Frito-Lay, continues to go on, and that group of products is now quite large. Now I'm going to let you print this page and simply look at it. It is a description of Tingyi and just what a powerful company it is. And how many products of PepsiCo's products are made by Tingyi, including Gatorade and the carbonated beverages and Mirinda, which is a citrus flavored product, and also it's sold along with Tingyi's proprietary products such as tea products. And by the way, Tingyi is China's second largest juice portfolio. It makes juices and it makes Tropicana. But as a result of this alliance, PepsiCo is making real strides in China. Might add that you can see that part of the deal was that PepsiCo received, let's see, I'm trying to remember now, 5%. I should have underlined 5. I knew that, doggone it. But it has an option to acquire, had an option to acquire up to 20% at its sole discretion by 2015. And I'm quite sure that PepsiCo would have wanted to exercise that option. Another important concept is background, and we'll finish the background section here. and that is Mrs. Nguyen, the CEO of PepsiCo, is a lady from India. We'll talk about her more, but she was born in India, educated in India, came to the US, got her MBA at Yale University, worked with a large consulting firm, and then in the US subsidiary of Asea Brown Boveri, an Italian company, big Italian company. Eventually got to PepsiCo as vice president for strategic planning. Later on became senior vice president, chief for strategic planning, and chief financial officer, then president, and then chairman. She is quite a remarkable lady. And she's also been very foresighted in her view of just what exactly a modern company like PepsiCo should be and do. So she came up, remember, with the notion of fun for you, better for you, and good for you products. And she also launched this idea of performance with a purpose. So the company should perform. It should make money for its shareholders, but it also should contribute to society and to the people who buy its products and add to its profits so that the company can grow. In its position as a large growth company, she believes that PepsiCo should give back. She's been involved with women's functions. She's been involved with dietary health functions all over the world. It's really true. And I might add sustainability of the environment. So PepsiCo provides grants and research for farmers to grow the product that goes in, for instance, corn and oats. And so PepsiCo simply has been very involved in promoting health and well-being of the people who buy its products and the countries and communities that support its businesses, and has received many awards for that. Okay, so now we're going to talk about a little bit of PepsiCo's financial trends. We won't get into them real deeply, but you're going to see some things here that warrant your concern or your interest. First, the sales trend. You can see that between 2009 and 2011, PepsiCo grew quite a bit through all those acquisitions. But after 2011, things kind of got rough. The economy of Europe sort of sputtered. After, in 2008 and 9, we had the financial meltdown here and around the world. The US came out of it, but Europe sort of stagnated. However, Russia suffered longer, and so did India. Not only that, as time passed, Russia invaded the Ukraine through contractors, through mercenaries that were supported by Russia, and it also annexed the Crimea, which is no surprise since 85% of the people in the Crimea are Russian, and they wanted to come back as part of Russia, but they're separated from Russia physically, and the Crimea is right next to, adjoins the Ukraine. And so at one point, the Crimea became part of the Ukraine, but the people in Russia had a vote and said they wanted to come back to Russia. Russia was accused of sort of, making that vote happen. And then in more recent years, the price of oil dropped, as you may remember. The result of that was to hurt Russia's economy quite a bit, because Russia derives a lot of its economic strength from its petroleum industry. And so you can see that with all those things taking place, PepsiCo's sales, after they came up from those acquisitions, were sluggish and then actually declined between 2014 and 15. And much of that is due to the Russian businesses that PepsiCo owns. You can see that the profit margin pretty much, when the large acquisitions occurred, there were substantial expenses incurred, but over time, the operating profit margin has come back up and never really fell too terribly low. I was vice president of corporate planning and development at Phillips Industries, and we manufactured things. And I can tell you that if we had 18% operating margin, we would have thought we died and went to heaven. And you can see 18% is about as low as PepsiCo got. So yeah, the operating profit margins dropped, but certainly not to a life-threatening amount. However, you can see in the lower left-hand panel that PepsiCo's long-term debt has gone up quite steadily. Just to purchase PepsiCo bottlers, PepsiCo Americas, which was another bottler, and Win-Bill-Dan, you're looking at $12.5 billion in 1 year. And Win-Bill-Dan was $5.5 billion of that. Nevertheless, things went pretty well. PepsiCo generates a lot of cash, and let's see, 2014 and 15, PepsiCo bought back a lot of its stock, bringing its shareholders' equity down to something on the order of $11 billion. Why is that important? Because it increases the rate of return on equity. Here is a slide, by the way, that just summarizes what I mentioned about reasons for PepsiCo's sales languishing. And you can read this when you're looking at PowerPoints getting ready for the exam. One other item that I did not mention is exchange rates. With the Russian economy and the Indian economy and other economies languishing, the US dollar strengthened, which meant that the rubles, by way of example, or the Chinese yuan, or the Indian rupees that were earned by businesses, PepsiCo businesses in those countries, they weren't worth as many US dollars as they had been previously. And incidentally, if you're a chief financial officer and you're looking at a strengthening dollar, what does that tell you you want to do when your subsidiaries in other countries make profit? You want to bring it back to the US just as fast as electronics can accomplish that. Because if you wait another day, your value in dollars has gone down some more. On the other hand, what about when the US dollar is weakening, and that means the foreign currency is strengthening and foreign currencies can buy more US dollars? Now, are you in a hurry to repatriate those foreign currencies and convert them into dollars, or do you want to wait so that those foreign currencies will be worth even more dollars? The chief financial officer and financial management of an international enterprise is a very complex proposition, especially in a firm like PepsiCo that does business in over 200 countries. Just think about the financial ramifications of that. Well, here we are then looking at the second half of the financial picture, and that is the balance sheet and its returns. You can see that invested capital essentially, let's go back for a minute, see long-term debt rose, but shareholders' equity dropped, right? Well, invested capital is essentially the sum of debt and equity. And so you can see that in those years when things sort of languished, so did invested capital. It was just there. It was just sort of, it totaled about $41 billion in 2010, and it totaled about $41 billion in 2016. Last year, 44 and a quarter. So to the extent that profit is going up on declining equity, okay, what is the rate of return on equity? It is a simple growth rate. If you add net income to equity at the beginning of the year, you're going to get equity at the end of the year until you account for dividends and stock sales and stock buybacks. But fundamentally then, return on equity is simply a growth rate. It's the rate of shareholders' equity growth before other things like dividends and stock buybacks and so forth are accounted for. So you can see that the return on equity, PepsiCo's return on equity, goes skyrocketing up into the 60s, including the last year. That won't go on forever. As equity gets rebuilt, the rate of return on equity will come back down. But back in 2007, 32%, oh man, that's not so bad. It got so low as 27%. Trust me, that's not chopped liver. Return on invested capital essentially works the same way, except we're talking about, generally speaking, operating profit as a proportion of average invested capital adjusted for the after-tax rate so that we can compare it to return on equity. And because there is so much debt, and because the rate of return on invested capital usually is much higher than the cost of borrowed capital, that is interest rates, then return on equity is always higher than return on invested capital. But you can see that as the business languished, as profit margins, even though profit margins came up, that there was this cost of acquisitions and so forth. And of course, and most importantly, invested capital grew faster than operating profit. And so what we see is a reduction in return on investment. And again, reduction, what does that mean? At its lowest point, 14.5%. Ladies and gentlemen, I would be delighted to accept 14.5% return on many of my investments. And today we're up to 18%, and you bet that's better than bonds. So you've got to appreciate the scale in some of these numbers. Okay, here's a real simple way to look at the mix of PepsiCo's business. In 2016, one of my students prepared this slide. It's good enough for me. But you can see that the mix of food and beverage was about 50-50, half food, half beverage sales. And however, insofar as domestic and international, a little larger portion, 58% is U.S., and 42% outside the U.S. However, that proportion has been rising steadily. And so if we look at these proportions 5 years from now, they'll probably be 50-50 as well. And as a matter of fact, here's a slide that shows you the mix of food and beverage. And here we see another trend. You can see that the proportion of foods used to be 48% in 2011, now 52%. And that was in 2016. And so food products seem to be growing and in importance for PepsiCo. And based upon all that I've seen, I do not think this trend will be interrupted anytime soon. So this takes us to part 2. So if you want to take a break now, this would be a good time to do it. Just press the little pause button, and I'm going to continue on If you're pressing the pause button now, hope to see you soon. Here we are then talking about the external environment, what it is outside the company that impinges on the company to drive the performance of that company. We're going to be talking largely about revenues here, but there are drivers, not just of demand, but drivers of cost, as you might imagine, drivers of capital investment. But pretty much we're going to be talking about drivers of demand here. So what are the sales drivers? And you can take a look at this slide and find a good sampling of them. They fall into the categories of demographics. With consumer products, demographics are maybe the most important driver. How many people at different ages, how many people in different locations around the world, what those people in different locations prefer in the way of beverages and dietary habits, the kind of foods they prefer, their cultures with regard to color, packaging, just the whole gamut of things. The way we develop advertising and media will vary depending upon culture, which varies with demographics. Economics, obviously, disposable income, spending power, and of particular importance to food and beverage industries is health. In this country, as we'll see, there are great concerns about obesity and diabetes, not to mention dental health. So let's take a look at some economic trends. Here are the GDPs in 2016, calculated on the basis of purchasing power parity. Now, by purchasing power parity, we mean that the GDP calculated in local currency, in the currency of the country, is adjusted on a uniform scale of purchasing power. That is, the goods and services that that currency can produce. One year, when I was managing partner of our consulting firm, I went to Japan to do some business. And before I left, my assistant went down to the bank. Our offices were on top of a large bank building. And she went downstairs to the bank and got me a couple $1,000s worth of yen. So let's say that the yen were trading then at 100 yen per dollar. Now I can tell you they weren't. They were trading for more than twice that, but I'm going to make this simple. So I went to Tokyo, and when I got up when I got up the first morning in Tokyo and went down to the coffee shop, of course, I'm a coffee addict, so the first thing I wanted was coffee. Now, let's say that back in Ohio, which is where our firm was located, a cup of coffee cost $1. So if $1 bought 100 yen, what should I expect to have paid for my coffee in Tokyo that morning? 100 yen. But it didn't cost me that. It cost me 225 yen. Why was that? Because that's how much coffee, the yen would not buy as much coffee in Japan as the dollar would buy in the United States. Very often you will see economic data translated based upon bank exchange rates. And if you think about that for a minute, does that make sense? Okay, we know that China, for instance, manages its exchange rate to keep the yen low enough so that it's attractive for foreign customers to buy at sort of a discount, right? The yen is underpriced. So if we looked at this graph in front of you and we did bank exchange rates, then the United States economy would be bigger than China's. The problem is that's economically untrue. When we adjust Chinese currency for true purchasing power, that is for its true economic value, lo and behold, China is substantially larger than the United States. That was in 2016, and trust me, the gap is widening, as we'll see in just a minute. So we have China as the largest economy, and therefore, and I might add with 1.3 billion people, it's the big market. It's the one that everybody wants to be in. Everybody wants to be in the US, and India is a real comer. You can see that its economy is less than half the size of the United States economy, but it's growing pretty fast. And then you can see the other important world economies on this graph. Now, let's take a look at some trends. First, here is a graph that shows the rate of growth from the actual growth from 2000 through last year, and then the International Monetary Fund's forecasts all the way through 2021. As you can see, China's economy surpassed the US economy at the very end of 2013, and the gap, as I said earlier, is widening. The black line represents Europe, and Europe's economy is a little larger when you take all 28 countries together, and China's economy exceeded that in a year later in 2014. So, and you can see that it's growing faster than those more mature economies. So if a company like PepsiCo wants to participate in a growing economy, it's got to be involved in China. Now, here are some larger emerging nations. Do you see one of these lines that's growing faster than the others? It's that black dotted line, isn't it? That's India. Now, again, bear in mind that India's economy is not as large as the US economy. You have to look at the scale here, but it's growing faster. And therefore, companies that do good long-range strategic planning, which is something I'm very interested in, they are very interested in India, because India at some point, by the way, it has just about the same population as China. China today may have 1.4 billion people rather than 1.3, and India has about 1.3 billion people. However, due to China's one-child policy, it won't be long before China's population starts to decline, and it'll eventually gravitate down maybe by 2030 to 1.2 billion people. On the other hand, before 2050, India's population will be around 1.7 billion people. That's a lot of consumers. Here is what happens when we divide that economy by the population, and now the roles reverse. The GDP per capita, done on a purchasing power parity basis, reveals that China's is lower than Europe's, and the US's GDP per capita is higher than Europe's. So the standards of living are still highest on average here in this country, and GDP per capita is a good indicator of consumption potential. You can see that these potentials are rising. If we looked at this over the long term, we would see China growing faster. Now, one of the problems is that we're relying on the IMF to do its projections correctly, and I don't think that they have here. I think that the red line should be moving up a little bit faster on the right side of this slide. Here, again, we see the developing nations. Rather interesting. The red dotted line is not India, it's Russia. And you can see that Russia has had its ups and downs. It had a big down in 2009 because of the crisis, the financial crisis, but it's had one just recently because of sanctions that have been placed on Russia by the US and the European Union and other nations because of its belligerence in the Ukraine and its annexation of the Crimea. Let's see if there's anything else here. There's one line that's moving up fairly quickly, and that's the orange one near the bottom, not all the way to the bottom of the screen, and that's the ASEAN nations, the Association of Southeast Asian Nations. This includes Indonesia, the Philippines, Malaysia, Singapore, and Thailand. Again, I think that even though it's rising faster than the other nations, at the end of the day, we're going to see some real rapid growth there. So once again, that's one of those groups that we pay more attention to. Let's see, one last one. What's the line on the bottom? India, right? India has many serious social and political problems. We'll get into those later, but those problems are keeping the economy down and the ability of people to consume down. Okay, so here are unemployment rates of larger companies. We can see over on the left Brazil. By the way, this was 2016 also, but Brazil's situation hasn't gotten much better. Brazil has had 3 presidents in 5 years, and Mr. Temer, the current president, has no chance of being reelected in October. He's not even running. And it's all the 2 presidents ago. Trying to remember his name, but he was caught for financial illegal doing, not embezzlement, but graft, I guess, and he was convicted and may be in jail now. He's been fighting his jail sentence, but he was sentenced to a jail term. His successor was Dilma Rousseff, and in the same party, and she was impeached allegedly for some of the same kinds of indiscretions. And now Mr. Temer has just been indicted just this year. Whether it's a good indictment or not, I don't know. But what I can tell you is that that Brazil has, in the recent past, been a very important economy in South America. And so for Brazil to have this problem is a problem also for the companies that have made large investments in Brazil. And it looks like Brazil is going to have another government real soon. Here are unemployment trends in the Euro area, the 28 countries of Europe. The 17 countries in Europe that use the euro as currency. The red line is China, the purple one is the United States. And what you can see is that China has enjoyed very low unemployment rates. So regardless of the low GDP per capita, people are a little more confident economically there that they're going to have a job, and that's because the government tells them they're going to have to work, and it tells them what they're going to do when they work. I've exaggerated a bit. I've been in China, I've traveled through China, I've seen the Chinese population at work, and certainly the economy is managed by the government. But people can change jobs. But in many communities, the political leaders, the party leaders, do actually help to determine the jobs that are available and in some cases who does those jobs. Unemployment in Russia is down to a more reasonable level now, and Mexico even lower. We don't have unemployment rates for India. And one reason for that is that India has admitted that its economic statistics are suspect, that they're not reliable. And the current government is trying to put back together its economic statistics into a more orderly system. And here then are those exchange rates for some countries that I mentioned earlier. So you can see that in the case of China, the US dollar could buy more and more Chinese yuan until China was told that it had to change things to get into a trading body. So it dropped its exchange rate for a little while, but now with the strength of the U.S. currency, because the U.S. economy has been so strong, its interest rates are rising. Those factors contribute to the value of the currency compared to other nations' currencies. And so the dollar is right back up there at about 6.9 yuan per dollar. When I was there, it was about 6.5 yuan to the dollar. So these charts reflect the amount of foreign currency that a dollar will buy. And you can see that it did a little yo-yo thing in China. To some extent, it's done the same thing in India. The dip was a little longer, but now with India's economy weak and, well, I shouldn't say weak, but simply because India's economy and business climate is hard to do business in, the US dollar will buy more rupees, which means the value of India's currency has declined. The same thing is true in Russia, as you can see. It's dropped back down a little bit. When I was in Russia, I think we could get about 64 rubles per dollar, and now it's about 60. In Brazil, you can see the same pattern as India, and India and Brazil both have these very troubled domestic politics, very difficult business conditions, high inflation. All of those things impinge on the value of its currency. So you can see that those two countries have been behaving quite similarly of late. Okay, so what are we looking at? US GDP per capita, about $60,000, Europe 40, Mexico 15. Those are not actual, the average income per people. It's rather the barometer of consumption potential. In Brazil, we're dealing with high inflation, high unemployment, the GDP's in recession for those reasons. Real question, how does PepsiCo adjust its strategy in that country? Remember PepsiCo bought a cookie company there. So how will PepsiCo adjust to that? In India, it's a real enigma. It's a great big country with a great big population. It's going to be even bigger, but its population is divided into thirds. And those thirds are called castes. It's very difficult for people in one caste to enter into another. It can be done. There is some upward mobility in India. However, if you're born into the lower caste, it's hard to break out. The way out, of course, is education. India's lower education is not held in high regard, but its higher education is. It has an institute of technology that is just first rate, and more than one, I might add. And the other thing is that for all of its shortcomings and flaws, the Indian economy has begun to accelerate. Even though the currency has declined, And of course, the decline in the currency helps India to export. However, until just only recently, India has frowned on foreign and banned foreign companies from owning Indian companies. That changed. And I might add, Mrs. Newey, remember, she is of Indian descent. So the Indians just love her to death. And what PepsiCo did under her direction, remember trying to catch up with Coke, right? They went to, they being the people from PepsiCo, under her direction, went to India and acquired a minority interest in the largest beverage company in India. Did not own control. Government was satisfied with that. Then the law changed, and Mrs. Newey made the original owners who held the majority interest an offer they couldn't refuse. And the result is that PepsiCo has a dominant position over Coca-Cola in India. The Indian word for soft drink, just like sometimes you'll say, hey, get me a Coke or get me a Kleenex. In India, the generic term for beverage is Pepsi. Yeah, okay. So Mrs. Newey is a very smart lady, and she has done a lot of things right, including looking at the long term. Those investments in China are going to be fine eventually when those sanctions are removed. Okay. Russia, the economy has been weakened by sanctions. It's benefited from higher oil prices recently. And when oil prices were over $100 a barrel, it benefited a lot. Then they cratered. Oil prices dropped down to about $30 a barrel. Now they're up around $70 a barrel. And recently the ruble has taken a little rock. But with these sanctions, Russia is sort of freeze-dried. It's a regional economy. It has great influence in Europe because it provides a lot of European petroleum. When the sanctions are lifted, things will get a lot more interesting in Russia. China, still growing fast, not as fast as the past, but still growing. 6.5% is about the rate of growth. And on an economy of something like $25 trillion, 6.5% of that is a lot of economy. So if they were growing at 10% or 8% in prior years, that was 8 or 10% of a smaller economy growing, getting larger. So that 6.5% is still pretty impressive. The 5-year plan calls for a much stronger consumer sector. Much is being done by the government planners to make that happen. There's a trade dispute going on with the U.S. That's very unfortunate. We're hoping things are going to work out okay, but for the time being, it's a problem. The one thing we just have to recognize is that the tastes in China are nothing like those in the U.S. Europe, as you move from Western Europe, from England, France, Germany, and you move south and you move east until you get into Russia. As you go through Eastern Europe and Central Europe, the economies weaken. Last year I was in the Czech Republic, Hungary, Austria, a couple others, and you know, they're doing all right, but they're not doing well as they could. Scandinavia is an exception. The Scandinavian countries are strong, and they represent targets of opportunity. Okay, so here are the populations of these countries that I mentioned earlier. You can see on the left side in 2015, China's a little larger than India. On the right side, this is IMF's forecast for 2050, and India gets to be almost 1.7 billion. It says China 1,350,000,000. I've seen other forecasts all the way down to 1.2. There's a reason for that, and that is that although the one-child policy has ended, the young people in China are just so busy pursuing professional careers that they hardly have time for one child. They're very upbeat, professional class anyway, and so culture gets into this again. I think that this estimate for China is too high. So here then, let's take a look at the markets that PepsiCo is in. Three dimensions of the external market: economy, markets, and industry. So we're into markets now. And worldwide, PepsiCo is #1 in snack foods. It's #2 behind Coke in beverages, but look at all the different kinds of beverages that PepsiCo now offers. And then in nutritious convenience foods, #1, the good for you stuff. One of the things that we've looked at in our international business course is the impact of culture. And I think I've really put too many red arrows here because I've got a red arrow on just about everything. As you can see, the US gets a very high score for individualism. We pride ourselves as being rugged individualists. Now, if we look over here at India or China, what do you see in the way of individualism? Not much, okay? So the way we would manage people in a factory, the way we would create advertising and media, the situation advertisements would be much different, right? A rugged individualist really won't cut it in China, at least not in their advertisements. The indulgence is this one over here. And frankly, we just, you know, we're not prudent. And so advertisements that show the customer just, you know, gorging himself, that would go down all right in the US. Let's see how that would work in Mexico, where people aren't as well off. And, you know, that's terribly wasteful and disgusting, and as it is in India. If we go to China, what we see is power distance. That is the distance that both physically and intellectually that different status, members of different statuses must keep between themselves. So can a subordinate walk right up to a supervisor and talk right at him? The answer is no, and that is especially the case in Latin countries too. You just got to keep your place, and if you don't, one way or another, you're going to be dealt with. So once again, if you want to have a successful advertisement in China, you're going to have people all of the same class together. You're not going to have people going up and talking to your boss's boss. If you did that in Scandinavia, however, in Sweden, it's just fine to talk to your boss's boss. Nobody cares. And then here we have long-term orientation. Okay, the Chinese, like the Japanese, and quite interestingly, the Indians, right here. The Indians and the Chinese think long-term. So planning. They endorse planning, and it is the way in which you approach management and the concepts that we use to deal with management in those countries should take a long view. Mexico, power distance again, the Latin. Brazil even stronger. But Brazil's got some other things going for it, including uncertainty avoidance. In Germany, if we add Germany here, we would see that blue bar real high. Incidentally, it is also high in India. And by uncertainty avoidance, we mean risk tolerance, the inverse of risk tolerance. So in Brazil, we've got a very complex culture because power distance is high, the risk avoidance, low tolerance for risk, that's strong, and indulgence. These in Brazil, people like to luxuriate a little bit, or pamper themselves. And Brazil's is an extremely complex society. So is India's. Again, we've got a high power distance because of those castes I mentioned. We've got high risk avoidance or uncertainty avoidance, and a pretty strong kicker of long-term outlook. Now, with risk avoidance and long-term outlook, I think we can get along there. But here in Brazil, where you've got risk avoidance and indulgence, that one baffles me. I'm not sure if I had to run a business in Brazil, how I'd deal with that. By the way, groceries are extremely important to PepsiCo and other companies in their industry. And so you can see here a few graphs of what's been going on in the organic foods supermarket industry, and they're growing pretty rapidly. And so that's another target for PepsiCo, even though Amazon, I believe Amazon has just acquired Whole Foods. Amazon now, or Whole Foods, and Amazon, its owner, is an important customer of PepsiCo. 13% of PepsiCo's sales were at Sam's Club, another big chain in PepsiCo's customer fold. So big stores, big chains require a special approach to marketing, and we'll talk about that a bit later. So I mentioned demographics earlier, and here we see the way that you might be able to combine the health appeals that we talked about earlier and demographics. Kids aren't really too excited about healthy foods, but we hope their parents are. But maybe they go for the fun for you. This is a slide that was prepared again by one of my students. I'm not sure that I'd go this far, but it's an interesting idea. The better for you, maybe that's for those of us who are in our early professional careers, don't want to overdo it. This Life Water, I'm rather surprised that it's in the better for you. I would put it in the good for you category. It's water that has some electrolytes and some things added, but they're certainly not bad for you. I think Life Water belongs in good for you. And then finally, the good for you product. For those of us who walk with canes, I don't walk with a cane yet. Anyway, PepsiCo has more than 102 brands, and so it can pretty much match their products to the likings and dislikings of different demographic groups. I think that's the point. Here's another very important point, and it is the expectation, not the expectation, the actual incidence of diabetes. And you can see that the proportions of people in various parts of the world that have diabetes are pretty significant. You can see, and this is a difficult chart to look at. It starts at 2013 and jumps to 2035. The proportions of, here are the proportions of growth. You can see that North America's growth, something like 37%. The growth in Southeast Asia, 70, and so forth. In terms of the number of cases, China is going to have a lot of these cases between ages of 20 and 79, and India. U.S. with a much smaller population still has a lot of diabetes cases. So no surprise, what we've got is a decline in demand for sugary drinks. And you can see that Coke dropped in 2015 by over 5%. Diet Pepsi dropped about the same amount. It's one of its great brands that was developed when I was there, Mountain Dew, through an acquisition, I might add, dropped almost 3%. And Pepsi dropped 3%. So all of the brands, with the exception of Sprite, a lemon lime drink, declined. Carbonated beverages have been associated strongly with osteoporosis in women. As it turns out, during girls' teenage years, the more carbonated beverages they drink, the more likely they are to get osteoporosis. So when that fact came out, that was one of the reasons why bottled water became so popular. A trend that I just can't understand is orange juice, I guess because it has so much sugar. But as you can see, there's been a sharp drop in U.S. consumption of orange juice. Now, the good news for PepsiCo is it's increasing in India. Here's a rather interesting chart. It relates the GDP per capita, consumption potential, to per capita consumption of soda. And by that I mean carbonated beverages. And you can see there's a trend line here, but look who's at the top, way out of the norm. That's the US. And the gap between the norm line and Mexico and Argentina and Chile, the South American countries, look at that gap. Look at that gap. It's wider than the gap between the US and the train line. So the Latin Americans are highly prone to consuming carbonated beverages. And so this is a big problem for their societies. As a consequence, again, where do we see the trends? Major declines in powdered drinks, which is, of course, in underdeveloped nations, but soft drinks, and even juices, and even beer. On the other hand, tea, wine, bottled water, and sports drinks like Gatorade and bottled water. Those are the two biggies, and of course wine, which PepsiCo doesn't make. And so here's what's been going on year by year to the consumption of soft drink. And I don't have to interpret this for you. It grew up until the turn of the century, and it's been dropping like a stone since then. That's 18 years, folks. However, it hasn't been dropping in all countries. You can see that in Latin America, as we would expect, soft drink consumption has been rising right through this year. Declining in North America and Western Europe, the more mature economies, rising in Asia Pacific and rising in the Middle East and Africa. But the big rise is in Latin America, and the big market is in Latin America, isn't it? So nevertheless, remember what's been happening in Brazil? That's the same kind of thing has been happening in Argentina as well. So Mexico is a big market. Brazil and Argentina are too. But again, the marketing, multinational marketing of these products requires a lot of sophistication. As I ask my students to remember, what makes international business difficult is its complexity. All the same functions exist in most countries. It's just that they're different in all those countries. Even and they're operated, they manifest in different ways. And here's India. So we've got this is the US consumption of soft drinks. Here it is in Latin America and Western Europe, and here's India. And now this chart stops in 2016, but I think you can see the trend. So again, PepsiCo has targets of opportunity. Now, what's been going on with bottled water? And as you can see in this chart, it's growing really, really rapidly. So here's the bottled water market in the US. Starts out in 2010 at $15.5 billion. And by 2018, it's almost $24 billion. So it's growing. And it's projected to get up to almost 28 billion by 2021. Another thing that just, I cannot understand it. I've never heard of this product. I've never tasted it, but it's called, and PepsiCo makes it, Kavita. And the market is that we're talking about is kombucha, and I hope I say it right. It's a growing market in North America, that's because it's allegedly so healthy. And here are PepsiCo's 3 categories of kombucha. And I'll take the one in the center just to illustrate. And I'll read this box for you in case you can't read it. Invigorating and bold, Kavita Master Brew Kombucha has a smooth consistency and taste, fermented from our rare kombucha tea culture. With organic acids and organic caffeine, it comes in 10 flavors. And then there's a probiotic and even an apple cider vinegar Kavita. So the trend is to healthy drinks like water and kombucha. So now we're going to talk, we've talked about the economy, market, and industry. Now we're going to talk economy and market. So now we're going to talk about the industry and its structure. And we'll start out with snacks. And the good news for PepsiCo is that worldwide, it accounts for over half of salty snack sales. That's really something. Kraft is at 12% compared to PepsiCo's 51%. And I think this was also in 2016. Here are the top 10 snack food brands in the world in 2016. 9 of them are owned by PepsiCo's and its Frito-Lay division. That is, and by the way, you can see my little note down here. We'll see it again when we talk about capabilities, because marketing-wise, this is a real marketing achievement to have 9 of the 10 top snack food brands in the world. Now here are some of the products that are made by PepsiCo and its rivals around the world. This student even put in Coca-Cola, but you can see that there are General Foods, General Mills, Post. By the way, Post is owned by PepsiCo, and Kellogg's. But it's a very competitive industry. So here are the top brands in 2017, and I should have put this right under that last one. And by the way, in pretzels, Snyder's has the lead, and PepsiCo is ranked third with its rolled gold. And the share of PepsiCo's share of each of those categories is shown on the right column. Here is a chart that shows PepsiCo's market shares in healthy food categories and against its rivals. And let me see here. Yeah, PepsiCo is the line all the way at the bottom, and you can see it's got a 30% market share. The next closest is General Mills, and Campbell Soup is here. I'm not sure what it makes in the way of convenient snacks. Here's Kellogg's. So anyway, in the snack food industry, the healthy snack food industry, PepsiCo is the leader. So now the soft drinks. And here we have a different story. These are the top 15 snack food, soft drink brands. As you can see, Coca-Cola is just dominant. This is 2016 again, but Coke and Diet Coke represent 79, $80 billion of sales. By the way, these are undoubtedly retail sales, not sales from the producer to the retailer. So you want to be careful in looking at the numbers. PepsiCo down at 10. Lipton, which has a deal in Europe with and the U.S. with PepsiCo at $6 billion. Here's Tropicana, a PepsiCo brand, at 5.5. Gatorade at 4.5, which is another PepsiCo brand, and Mountain Dew at 2.5. But look over at the right side, and as you can see, the soft drink values are dropping, okay? This is pretty much across the board, with the exception, as I recall, yeah, these are just soft drinks. If bottled water were on here, we would see that they were growing. Incidentally, I made a little mistake. I talked about retail sales. These are global brand values. They're essentially retail sales, but they're calculated by a marketing agency, and I don't know whether they really represent retail sales or not. Okay, here are market shares in the soft drink industry again. And as you can see, Coke's share has dropped slightly from 2004 to 2015, but it's holding at about 42%. Here's Pepsi's market share trend. And as you can see, PepsiCo's market share has been dropping. Why is that? And if you read the little yellow sign at the bottom, you'll get my take on it. It seems to me that PepsiCo has realized that the demand for carbonated beverages, and especially those that are sweet, is declining. And so while it wants to hold as much of its share as it can, it's going to put its capital where it has greatest strength, in snack foods. And it's not going to run as fast as it can to be second in somebody else's race. And so it acknowledges and sort of accepts a slowly declining share of a rapidly declining market. I think that's very intelligent. But when we get to capabilities in a while, we will see that PepsiCo may be having second thoughts. So here are the trends in sales and profitability and rates of return between PepsiCo, the red line, Coke, the black line, and Mondelez, which is PepsiCo, a good rival of PepsiCo that makes just snack foods. So we've got beverages in the black line and snack foods in the yellow. And as you can see, although PepsiCo's sales have been stagnant, Coke's have been no better. So PepsiCo's doing just fine compared to its largest rival. Its operating profit margins have not done as well as Coca-Cola's, and I'm going to explain that in just a minute. So I'll just leave that with you for now. Whoa, I hope okay. Return on invested capital, Pepsi actually does a little bit better in that very important financial measure. And return on equity for PepsiCo has been higher than Coke and much higher than Mondelez. And that's really remarkable, but we know that the reason for that is that PepsiCo bought back a lot of stock, if you remember that from our earlier review of the financials. So here's PepsiCo's, sorry, this is Coca-Cola. The red line in this one is, I'll get it right yet, that's PepsiCo's long-term debt. And we saw that going up rapidly earlier. But here's Coca-Cola. That's the thing I wanted to try to get mentioned. And I'm sorry that this line wasn't adjusted. I think I can change it right here for you. Let me try to do that so that you can see it better. There we are. But it's clear that Coca-Cola also has been trying to grow through acquisitions. Coke's equity also hasn't been performing all that great, but it's doing better than PepsiCo. And the best right now is Mondelez. The invested capital for all three has been pretty flat in recent years. And the leverage, which I did not mention when we looked at PepsiCo's financials, and that's a mistake that I should not have made. Leverage is the portion of capital represented by debt. So invested capital is the sum of debt and equity. What portion of that sum is represented by debt? If it's a large portion, then the company has a fairly high financial risk. The leverage ratio, debt as a proportion of invested capital, is a measure of financial risk. And so let's take a look. Here we have PepsiCo at 72% and Coke at 55%. Clearly, PepsiCo has a problem, and that problem is financial risk. And that is going to influence PepsiCo's ability to implement aggressive strategy. So here is, in fact, what I mentioned earlier. And you can read the details for yourself. But basically, the beverage companies make concentrate. They sell it to the bottling companies. Bottling companies have these big plants with lots of machinery and equipment in them, and they have to buy large inventories of everything from water to sweetener to bottles and cans. And so they have very high, and trucks to deliver to the grocery stores. So the bottlers have very high fixed costs. The brand owner, Coca-Cola and Pepsi-Cola, don't have high fixed costs. They have plants that make concentrate, but one concentrate plant can service a lot of bottlers. So the brand owner, the concentrate producer, has a lot higher profit margin than the bottler. The bakeries, PepsiCo's Frito-Lay division and other food products divisions, they own their own bakeries. They own all the machinery and equipment in those bakeries or food processing plants. And so just like bottlers, they even have own their own trucks that deliver Frito-Lay products to the grocery store. And their profit margins, like bottlers, are much lower than bottlers. So because PepsiCo's product mix is about half food and half beverage, PepsiCo's profit margins are diluted by the proportion of food products. And it's for that reason that PepsiCo's profit margin is lower than Coca-Cola's. But what's remarkable is that PepsiCo's rate of return on invested capital is actually higher than Coca-Cola's. So PepsiCo does a really good job of managing its assets. Here now is another way to look at industry structure using Porter's 5 forces model. You can see that the 5 forces that push profit down are rivalry, the threat of new companies coming into the industry, the threat of substitutes, such as, so what's a substitute for Coca-Cola? Tea or coffee or bottled water. Supplier power, the extent to which suppliers can charge high prices, and customer power, the extent to which customers of PepsiCo can negotiate for a low price. Now you got to be careful here. The customer is not you and me. PepsiCo's customer is the bottling plant, or in the case of fast food markets, the retail, the fast food chain, because it delivers concentrate to the fast food chains, and they put it in dispensing machines and produce it by adding water that way for you. Substitutes, there are just so many substitutes that's a real significant issue for companies in this industry. Even though there are not a lot of big players in these industries, rivalry is high. And it's because of the media intensity and the extent to which companies engage in very aggressive marketing techniques. Threat of new entrants, there have been some lately in the beverage industry, but generally speaking, it's not very high. And suppliers essentially provide grain, sugar, components that are easily obtained. Supplier power is quite low in these industries. So here's how you evaluate 5 forces and other models that are used in strategic management when you're in a multinational country. You can see that we've got 5 countries identified here, and we can rate each of these forces, total them up, divide by 5, and get an average rating. When we do that, we can see that the US and Europe impose strong forces on profitability. The stronger the force, the lower the profit potential. On the other hand, India, for all of its shortcomings and its difficulties, seems to impose the least or the weakest forces on firms' profit potentials. So, and we do this all the time. If you're an analyst and you're into strategic management at all, you might just do these analyses to evaluate regions or countries to determine where the priority of strategy should be. Wherever you see a 5, the priority of strategy has to be to overcome that force in order to do business on a profitable basis. Also, the lower the score, the more attractive a market may be based on its profit potential. And so this is a little summary of what I just said. I'm going to let you read it, but what is surprising is that rivalry it does differ substantially between countries. So, now what we just looked at was beverage products, okay? And so now we're looking at snacks. And in this case, the result seems to be that the nations where, the big nations where PepsiCo does business are relatively evenly matched. There's not a lot of difference. And that's because this is pretty much a product. These are products that are made out of commodities, oats, corn, and so forth. And so again, the rivalry is a big surprise because Frito dominates the industry, and when there's a leader, that cuts down on rivalry. For the same reason, the threat of new entrants into the industry is relatively low. But there are a lot of substitutes, not as high as substitutes for beverages, but there are a lot of them. Suppliers don't have a lot of power at all, but the buyer does. And again, who's the buyer? The buyer isn't you or me. The buyer, in the case of beverages, is the bottler, right? The bottler's buyer is the grocery chain. Frito-Lay's buyer is also the grocery chain because Frito-Lay makes its own product and delivers it to the grocery chain, just like the bottler delivers beverages to the grocery chain in its trucks. So the distribution channels are a little different between beverages and snacks. Overall takeaway, there are two big forces that need to be reckoned with. The threat of substitutes, and that's because they're just always, companies are always coming up with new products. And one thing that I try to teach my students is that when there's the threat of substitutes is high, be the substitute. You've got to be the substitute. Otherwise, you'll be left behind. The other is the power of the buyers, especially when the buyer is the grocery chain, because the buyer can give you more or less shelf space in their stores, by way of example. So given that the buyers have a lot of bargaining power, PepsiCo has developed a strategy to deal with that strength. And I'll just let you know that it's coming in a later slide. So again, this slide, you can sort of just read it and take the main points, but this is a device that enables us to identify profit potential and priorities for strategy. Another tool that we can use to estimate the threat of entry into an industry by new competitors is what a guy named Pankaj Ghemawat, a professor at Harvard, developed. It's called the CAGE model, C-A-G-E. The culture, administrative, geographic, and economic distance between your home country. So how difficult is it to enter Mexico, China, India, Europe, or Russia? And the higher the score, the more difficult it is to get into the country. Culture, I think you can sort of understand what we mean there. Administrative refers to all the tariffs, duties, the red paper, the regulation, and so forth. Geographic distance is just what it sounds like. Economic distance, of course, refers to consumers' abilities to afford the product. And the distance between the home country the U.S. in this case, and the country that you want to enter. And as we can see, India looks like it's going to be tough to get into because the barriers to entry are high. Okay, here is a quick little slide that identifies one thing very quickly, and that is that these products are in both of them, the beverages and snack foods are in mature industries. This makes the priority of constantly developing new products very high. This is a BCG matrix named after the Boston Consulting Group. What it does is compare market growth rate to market share. What you'd like to have is a well-balanced portfolio of products that are not growing very fast, but generating a good profit. And because they're not growing very fast, the profit doesn't have to be reinvested in assets. It turns into free cash flow. And that free cash flow can be used to fund new ventures, the development of new products and acquisitions. And hopefully, those new products, those ventures will flow over to the high market share side of this ledger, of this matrix, and become stars, where they're still growing and they and your company has a large share. Both Coke and Pepsi are primarily have cash cows. So here we see many of PepsiCo's products. But PepsiCo is unique. It's developing many new products. By the way, the person who developed these slides put Coca-Cola's Powerade, a competitor to Gatorade, in this category, and I agree with her. It's a dog. Notice that Tropicana is sort of right in the middle of everything here. Rather interesting thing to do it. And here is a Gatorade originally was green, but Gatorade in recent years has come out with all kinds of new flavors. Long story short, PepsiCo has a pretty well-balanced portfolio. That's good for sustaining growth. It's a little heavy on the cash flow side, and that free cash flow can be used to do acquisitions and fund research and development and the development of new products. That's what I just, this slide pretty much contains what I just told you, what the various products are. So you can read it and study it for the exam, but I'll go right by it. So PepsiCo, it's #1 in snack foods, #2 in non-alcoholic beverages, appeals to all age groups, making a maximum effort to reach health-conscious consumers. Product lines have been expanding rather rapidly in recent years, and the financial burden performance, however, has been burdened by operations in countries with troubled economies, including Russia, India, and Brazil. But compared to its rivals, it's doing pretty well. Nevertheless, with the high leverage that it has, PepsiCo probably cannot afford really aggressive strategy in the next 2 or 3 years, probably 3, because it's got to get that leverage down to the point where its financial risk isn't so high, because another recession and higher interest rates are coming. And PepsiCo needs to be thinking in the long term. And when it does so, it sees its leverage, and that's its executives surely are trying to deal with that high leverage now. Okay, so that's the end of the external environment. I might add that was the largest section. Now we're going to talk about the business itself, PepsiCo's organization structure, and then how it operates. This is the chief executive today, Indra Nooyi. I've already described her for you, so I'll go by this slide quickly. But what I can tell you is that she has really set a standard. She's broken the glass ceiling. She's accomplished more than most male chief executives have. She has set record after record for just professional accomplishments and has made PepsiCo into the very successful firm that it is today. This is the organization structure, and it's really important to focus in on this. Hint, hint. You can see that two of the divisions are based on products. PepsiCo America's food products, PepsiCo America's beverage products. But they are geographic Americas. And then another division deals with international. And the international is divided between the United Kingdom and Europe, and the Middle East, Africa, and Asia. Big division. And so what we have is a combination of division according to geography and regions and products. In the one case, at the top level, it's geographic. But when we get down in the Americas, we then are developed by product line and the type of product that is offered. And so in one of your chapters, I think it's chapter 10, you have a diagram that looks like this. And in fact, and it was developed by two academics, Stopford and Wells. This diagram identifies that companies can grow either as area divisions when foreign sales as a percent of total sales grow, or they can grow as product divisions and when the product lines get diverse. And so PepsiCo, again under Mrs. Nooyi's direction, PepsiCo has had a variety of structures over the years. Now, if these two groups continue to combine, they may combine into a global matrix. But that is a very complex structure, and frankly, it's been avoided of late. You know, we don't like to get into matrices if we don't have to. Sometimes you have to. So what has been done is that a product group has then been subdivided into, a regional group has been divided, I'll get it right yet. A product group has then been divided into regions. North America, foods North America, Latin American foods. If we go North America for Frito-Lay, North America for Quaker, and Latin American, all the foods. The same approach has been taken for beverages. And however, where in the rest of the world outside of North America, then what we have are regional, strictly regional divisions. So let's look at it again. Those last two over on the right, they're area divisions, aren't they? And in North America, we have a combination, not a matrix, but a combination of product divisions that are then divided regionally. A rather interesting approach to do it, but it works well for PepsiCo. Okay, so here are the relative sizes of those divisions. We can see that North American beverages account for about a third of sales, and we can see that the Frito-Lay division in North America accounts for a quarter. But when we get outside of those two, we then break it up geographically. Oh, pardon me, Quaker should be added to Frito-Lay for food. So we get 20% there. Am I saying that right? 25 and 4, 29, sorry. So we have about a third and a little less than a third for beverages and food. in North America. However, when we take those other three divisions, we will find that a larger than average portion is food products. So as you recall, food and beverages are divided right down the middle. What is it, 52% food and 48% beverage, is that right? Okay, so let's talk about how PepsiCo operates its divisions. And here's that same map that I showed you earlier. The dots just indicate countries, but they're in a lot of countries. They're, I think it's, well, the caption indicates over 200 countries. How the product is distributed is pretty interesting. And recall that I said earlier that beverages are distributed differently from snack foods. So the concentrate plant, and there were, when this slide was done, 2 plants. See if I can fix that. There we go. So 2 plants handle, I think, probably the whole United States. But in any event, then there are the bottling plants. And the bottling plants put all of the product together and then deliver it to grocery stores, food service companies that use bottles, and vending machines. But there's another group of customers. Whoops, pardon me. Yeah, half of the bottlers are owned by companies and half are franchises. Pardon me, I was getting ahead of myself when I look at Frito-Lay. But in any event, you can see that we've got the same organization, but we've got bottlers that are owned by franchisees or franchised bottlers, and bottlers that are owned by PepsiCo. And they sell to grocery stores and restaurants and to vending machines. Okay, now something that's kind of left out here and should be explained, and probably another line needs to be put in here, is that PepsiCo also sells concentrate in canisters, and those go directly to retail chains and they put them in their dispensing machines. So PepsiCo sells product that is not in bottles, and it goes directly to the food service or restaurants, and it sells a lot that way. So there's a little flaw in this diagram. Okay, and here are just some illustrations of bottling companies in the PepsiCo network. So in sub-Saharan Africa and Europe, you've got 65 countries that are covered. In Japan, there's been a joint venture with a Japanese, the largest food and beverage company called Suntory International, and they formed a joint venture in Vietnam. I've already talked about China and the joint venture with Tingyi, the largest food and beverage company in China. And it's PepsiCo's master bottler, and it manages relationships with other bottlers in China. The Pepsi bottling venture is just a huge one. I talked about it earlier. And among other things, it owns bottlers in North Carolina, as well as several other states. So here is the Frito-Lay distribution channel, and it's different. First of all, Frito operates its trucks and sells to retail stores, food services, and vending machines. But it also sells through distribution centers that serve companies such as Kroger and Walmart and so forth, and Sam's Club. So many of these large chains operate their own distribution centers. I might add that in the beverage industry, there are also distribution centers that take delivery of bottled beverages and then distribute them as well. So there is a lot of beverage products that go through distributors, and that, including contract distributors like MBM over in Rocky Mount, North Carolina. Okay, so whoops, I hit the wrong button. Boy, don't you wish. So now we'll get into marketing and just talk a little bit about how PepsiCo performs its marketing. And here I'm going to show you products that are made in a variety of countries, among other things. Here's Russia, first of all. As I mentioned earlier, PepsiCo's been in Russia for a long time. It's got 40 plants there now, and it's number 10 out of the 20 biggest food and beverage companies in Russia. Frankly, I think it's much larger than number 10. I think that's a typo. But this product that I made, this company that I mentioned that PepsiCo bought is called Wimbledon, and here are some of its dairy products up in the upper right. However, PepsiCo also has a large fruit juice plant in, I could almost pronounce Lubinskaya. Anyway, it's a town I visited in Russia. And here you can see that they also make bottled water and the equivalent of Frito-Lay and Quaker popcorn. Here are products in India and advertisements in India. And you can see here, this is actually something that came from a website of an advertising agency and what they were, or advertising journal. And the essence of what this says is that PepsiCo, contrary to its patience with Coke and allowing Coke to dominate the soft drink market, in India, Coke has decided that it's going to kick up its heels and give Coke a fight. In India, 7-Up is a PepsiCo product, as it is elsewhere outside of the United States. This is a picture from an advertisement in India. And the guy who's bunching away here on something, he has chased a train to give his friend, and there are several ads with these two guys that run in India, and he chased the train and gave his friend these sandwiches to eat on the train, and then realized that he forgot something. So he ran back, he got a bottle of Pepsi, and then got on the train and jumped on the train and gave it to his friend. And right at this point, there's a conductor that comes on and says, tickets, please. And of course, this guy doesn't have a ticket. In any event, these ads have been calibrated to appeal to the cultural tastes and norms of people in India. This is some of the PepsiCo product. PepsiCo also makes Mirinda in India. You can see a PepsiCo display over in the upper right of its beverages. And again, the classic PepsiCo product. Also, you can see a little summary in the lower left of all the different ways that PepsiCo advertises in India. Walker's Chips is the #1 chip brand in the UK, and it was acquired by PepsiCo, and it holds over half of the British chip market. It's a biggie, very successful. This Duivas is a brand of food products, primarily nuts, and was acquired by Sara Lee earlier, but then acquired by PepsiCo in 2006. So this is a brand of cocktail nuts and snack nuts, snack foods. These I got from the Czech Republic, and quite remarkable. Now, the Strong brand is actually produced primarily in Germany, but it's taken off in the Czech Republic and Hungary, very popular. It's a Lay's product, but I don't think it's sold in the US. Gatorade comes in a much different bottle. I don't even know how to pronounce Karuni, but that's how I pronounce it. And Everbest is essentially sparkling water. So it's a water product. So snacks and beverages in the Czech Republic, which is doing pretty well, I might add, economically. I was there last summer. However, here is a page from Advertising Age in April of this year. And what it says is PepsiCo is going to start getting nasty with Coca-Cola because Coca-Cola is building its market shares. Nevertheless, in the lower left corner, I put some interesting numbers. That is the amount that PepsiCo has spent on advertising in the last 5 years. And you can see that it's in the nature of $2.5 billion just on advertising. So the real question is, how much is enough? And do you think that PepsiCo should spend more? And if so, to what lengths should PepsiCo go to take on Coca-Cola in the carbonated beverage industry when Coke has such a lead and consumption worldwide is declining? Now we're going to talk about technical functions, primarily research and development. And this is where PepsiCo has really stood out. This is the guy that runs it, and he's an MD. In addition, he has been so successful that he is the vice chairman. There are 2 vice chairmen, the chief financial officer and this guy. If you want to see a really interesting video of PepsiCo's research and development activities, go to this website, copy it and paste it in your browser and go there. I think it lasts for 15 minutes. You will see how PepsiCo develops food products for Chinese tastes. For instance, they make seaweed chips. They found out that Chinese tastes really like potato chips with a cucumber flavor. Now that wouldn't go over too well here in the US, but in China, it's a hit. And also how beverages are developed. And by the way, the lady who runs their laboratory there is the one who takes you through the lab, not this guy. But in any event, if you want to see one of PepsiCo's great laboratories, it's in Shanghai, and you really ought to look at that video. PepsiCo has 30 laboratories around the world. Here are a few of them. Some of them are noteworthy. In Chicago, the Quaker Oats Center of Excellence. In Mexico, where they bought those 2 cookie companies, Baking Category Innovation Center. In Lebedan, Russia. That's the city I visited. It's a medium-sized city. I love it. If I ever have to live in Russia. I want to live in Lebanon. It's a nice place. It's on the Volga River, and it's a very nice place. Anyway, they have the fruit and vegetable R&D center there because, among other things, there's a lot of agriculture and so forth. But 30 of these laboratories. This company really is heavily involved in research and development to develop new products. Something else that Pepsi does is called Pepsi Lab. I'm just going to read this for you. Pepsi Lab is a business accelerator, offers partnerships between PepsiCo and small little startup companies, supports entrepreneurs in taking their startups to the next level. Participants gain access to PepsiCo's experts, its distribution channels, international markets. Opens a broad range of possibilities for food and beverage product testing and technological solutions and acquisitions by PepsiCo. It's a brilliant move. This is brilliant. Here's the money that PepsiCo has spent on research and development in the last 7 years. A little dip last year, but $750 million, roughly $750 million in the last couple of years. That's a lot of research and development. Here is that same slide we saw earlier, but now we're talking about how successful they've been with their marketing. And this probably should have been a little bit earlier, but we're talking about PepsiCo's marketing acumen. Here are the mega brands, with sales over $1 billion. And you can see that they have a lot of them. As I recall, there are 22 brands with over $1 million. With over $1 billion. $1 billion. These are billion-dollar brands. Talking about administration, how the administrative management function goes, it's a real problem. It's complicated in a complicated company like PepsiCo. The subsidiaries act pretty much independently with most administrative functions. Finance and accounting are directed by corporate management, no surprise there. Marketing functions tend to be coordinated centrally, and that's because they'd like the Pepsi brand, the Frito brand to be recognized globally. But sales and promotions, advertising are done locally and managed locally because they have to be. Bottlers, except for company-owned plants, are independent. They conduct their own sales and promotion and distribution functions. And bakeries in the U.S. anyway are all company-owned. Well, they are all company-owned everywhere, to my knowledge. And distribution and promotions are conducted at the subsidiary level. Labor relations are coordinated between corporate headquarters and Frito-Lay management in Texas and elsewhere. In the U.S., PepsiCo, Frito-Lay's trucks are operated by Teamsters. The reason I happen to know is that one of my earliest consulting assignments for PepsiCo was with Frito-Lay, trying to figure out how to justify its labor practices as they were preparing for labor negotiations with the Teamsters. Okay, so here we are now looking at strategic issues. And we're going to talk about PepsiCo's strategy and initiatives. First of all, rather interesting if you just look at PepsiCo's beverage and snack brands in these various countries, they're doing pretty well. In Japan, beverages are #2 behind Coke. Russia, they're #2 behind Coke. In the US, they are too. In snacks, the problem is India. There are many brands in India, and PepsiCo is really going for that with Frito-Lay and products that they've developed in India. And so if you look at the goals, what is it that PepsiCo is trying to accomplish. I suppose that its goals are to be number one, with a possible exception of beverages in the United States, where the goal probably, in all practicality, is to maintain their number two position. It's a transnational strategy. You know, there are four basic international strategies. International, which means do everything the same way all over the world, the way Hilton Hotels does, or my old alumnus, Holiday Inn. I had the privilege of helping Holiday Inn expand into Europe, and a Holiday Inn in Europe sort of looked like a Holiday Inn in the US until we realized we had to modify it a little bit. But Marriott, Hilton, Sheraton are pretty much the hotel you find in Europe, or in my case, I stayed in a Hilton in Xi'an, China, and it was a wonderful Hilton because it was just like the Hilton in the United States. That's the international model. The multinational model recognizes that you've got to develop different products and operate differently in different countries. Lots of food companies do that. The other alternative is to operate globally. So in the petroleum and oil and natural gas industries, in the chemical industry, oil is oil is oil. Sulfuric acid is sulfuric acid. And a refinery is pretty much the same wherever you find one. So in those industries, companies operate according to standardized models. And global standardization is called the global model. Now, in some industries, you can't just be standard. You can't just be multinational. You have to put them together. And when you do, that's called transnational. And if it's clear that PepsiCo has adopted a transnational strategy. It gives lots of latitude to its local operations, but it also directs a lot and makes decisions at centrally quite often. It standardizes its brand. It standardizes some of its formulas and its processing methods. On the other hand, different products, different product lines in different countries focus on local needs, tastes, labor forces, climate, refrigeration capabilities, and so forth. It's a transnational model. And this fun for you, better for you, and good for you, that enables PepsiCo to differentiate itself from its rivals. It offers products that are bad for your teeth and make you fat, but it also offers products that are good for you. And this wide variety of products that it offers enables it to implement this fun for you, better for you, and good for you model. And it has very intensive creative media advertising. There are barriers to entering in countries which must be assessed. And this is a little chart that simply shows how that might be done. The person who developed this chart looked at roads and transportation, the availability of ingredients and packaging, regulation, labor conditions, and banking. I thought this was a well-done chart. When you're all done, the most difficult country to enter, and I think we saw that earlier, is India. So India is a very attractive market, but it's tough. Another device that we can use to define and describe how companies grow and to describe their growth models is Ansoff's growth matrix. And it basically asks two questions, and those questions are not posted on this slide. So you're going to have to pay attention. First of all, are we going to develop new products or use existing products? Are we going to stay in the existing market, or go to new markets. So in market penetration, we're competing with current products, no new products, in existing markets. This is called market penetration, and frankly, it's what we go to work to do every day. So we try to gain market share by forming alliances, media advertising in this industry, that's a big one, designing new kinds of packaging, and really serving customers well. And PepsiCo has come up with a technique, a strategy called the Power of One, where it forms alliances between its bottlers, its bakeries, its corporate advertising, and retail grocery chains, and convenience store chains. And these alliances have enabled PepsiCo to help retailers market their products and in the process gain larger shares of shelf space. Now, if we stay in the same market, existing market, but we develop new products, here are some illustrations of how that has been done. Do you know that PepsiCo acquired Cracker Jack? When I was a kid, Cracker Jack was just Cracker Jack, but now it's a PepsiCo product. PepsiCo acquired a little company in Tennessee called Mountain Dew. It was just had a funny name and a real strong taste. It had enough caffeine and sugar to clean the rust off of bumpers. And but we saw it for what it was. It responded to a cultural emphasis on intensity. This was the time of the Vietnam War. This was the time when men were letting their hair grow long. All sorts of stupid things were going on. It was intense. People were coming back from the Vietnam War and reacting. Mountain Dew just appealed, and remarkably still does. So there were acquisitions of new beverage companies, development of new beverages like Aquafina, Life Water, Mirinda, and that product Kurkuri that we mentioned earlier in India. All of those were new products in existing markets. Now, we can take the current product and move it to new markets. So instead of existing market, new market, but same products. And of course, that's what PepsiCo did when it moved into successively new countries. And then finally, what Igor Antsov is the guy who made this matrix up, would be product proliferation, which is essentially diversification. It's new products for new markets. And of course, Wimbledon, the acquisition of Wimbledon in Russia, Wimbledon makes dairy products, and Russia was a new country for PepsiCo. PepsiCo makes puts Starbucks coffee with cream in it. It's a ready-to-drink Starbucks drink in a bottle. It's served cold, and it's extremely popular in Latin America, as well as it's growing in popularity in the U.S. Tropicana, Gatorade appeal to completely different markets, tastes, demands than carbonated beverages, and PepsiCo acquired both of those. PepsiCo also acquired some businesses that it later divested. American Van Lines, Wilson Sporting Goods, Taco Bell, Pizza Hut, and we'll get into that a little bit later, but all of those were new products in new markets, or product proliferation. Okay, so one way to look at the way PepsiCo has grown is by acquiring companies in the industry it's already in. And you can see many of these we've already talked about before. In Latin America, the acquisition of Gamesa and Mabel, both bakery products. Russia, of course, we've talked about Wimbledon. India, the Kurkuri is, again, a unique Indian product that was developed by PepsiCo India. So the other thing that that PepsiCo has done is implement the strategy pretty well. They do it through heavy use of technology. They emphasize sustainability and alliances when they essentially, if you can't beat them, join them. And so coffee is a substitute for carbonated beverages. So be the substitute. Let's make ready-to-drink coffee with Starbucks and sell it as a cooled beverages. Lipton tea is sold more heavily outside the United States, but it's bottled by PepsiCo bottlers. So these are substitutions. And Suntory in Japan and Vietnam, another alliance. The power of one, as I mentioned earlier, was brilliant. It was developed by one of PepsiCo's earlier chief executives, Roger Enrico. And Enrico came up with this just brilliant strategy of becoming partners with grocery stores, helping the grocery stores to sell their products by forming these alliances to make displays, to do cooperative advertising, to set up the shelves in the grocery store so the products are most appealing, to put beverages on one side of the aisle and snack foods on the other. So when Mrs. Smith goes down the aisle and she's thinking about the party for this weekend, she gets her Pepsi-Cola and she gets her Lay's potato chips. This method of marketing is still ongoing, and it's just a very effective strategy. The other possibility for growth is vertical integration, where you make a product and then you sell it to another company that you own. So PepsiCo's beverages and snack foods could be sold to the likes of Kentucky Fried Chicken, Taco Bell, and Pizza Hut. There was a little problem, and that is Coca-Cola figured out that they could go to our customers, that is the grocery stores, the fast food companies like McDonald's and like Burger King, and say to Burger King, why are you doing business with PepsiCo? They're your competitor. And Burger King would usually respond by saying, what? They're not our customer, they're our supplier. And then Coke would explain that PepsiCo owned Kentucky Fried Chicken, Taco Bell, and Pizza Hut. And eventually Burger King kicked us out. And with that, the PepsiCo realized that they should not be competing with their customers and divested those three very successful fast food companies, which now are in a single company called Yum Brands, which is a very successful company and a very successful stock on the stock market. PepsiCo also acquired Wilson Sporting Goods and North American Van Lines, the company that moved me from Kokomo, Indiana to New York City. Because when I moved to New York City to join PepsiCo, North American Van Lines was one of its subsidiaries. By the way, PepsiCo owned a bunch of other subsidiaries, crazy stuff. Now it's focused on food and beverages. Another big issue is just how does a company like PepsiCo coordinate domestic and international management? And the transnational organization and management in a global matrix, in a global, I don't know whether matrix, in a global fashion, is very challenging. And I can, honest, I know how to spell fashion. It's in a global slash local, global local fashion. So some functions are managed corporately, some at most are managed regionally or locally, and quite remarkably, technology and research and development functions are managed centrally. But, and quite literally, there's a computer system that allows anybody in the laboratories around the world for PepsiCo to enter ideas for new products and research, and they are all looked at by staff at PepsiCo's research and development headquarters in New York. Yet the staffing and the techniques, the methods of research and development in these research and development centers are highly focused on specific product lines or specific types of process. Remember the food and the produce and fruit center in Russia, by way of example. All right, so here are just some quick examples of innovations that have made PepsiCo has made, and we'll just flip right through them. This is Mirinda. It's a product that was developed in India, there's another product that is similar called Yetigan. I'm sorry, I said India. This product was made not in India. It was developed in Spain, and it was acquired by PepsiCo. But it's now very popular in India as well as Turkey. But Mirinda, God, I'm sorry, was developed in Spain. It's a Spanish product. Life Water was developed in the U.S. It's trying to capitalize on the popularity of water and offset the risk of water becoming a boring product. So it's purified, pH balanced with electrolytes added for taste. So it's healthy water. Kurkuri is a brand of corn puffs developed and produced by PepsiCo India. That's the one that I wanted to mention. Its word, the word Kurkuri is named after the Hindi word for crunchy. Completely developed in India and made in plants in India and now Pakistan, Canada, and the UK. I've especially put these ads here or these exhibits here because I'd like you to appreciate the difference, the cultural differences in ads that appeal in India. Where people are all together, they're worried about their body, and so forth. But this is a classic illustration of how advertising and promotion has to appeal to local culture. This is Sabra, and it's Eastern style food products, hummus. I think we probably all know what hummus is. Also, Sabra makes guacamole. There's a video somewhere in the PepsiCo network that shows you how to make guacamole. I really don't think I need to see that, but I think we'll see a picture of it in the next slide. They sell $800 million worth of this stuff. So it's, and it comes in all kinds of flavors. Another company is, let's see, another product is Al Valley. It's a gazpacho, which is a soup that is served before a meal cold. and it's made with all kinds of ingredients that you can see when you read the Spain. And this product has won awards because it's in Spain especially because of its sustainability and its innovative use of vegetables. Here's a product that is made by a German company, Müller, and it's what am I trying to say? Yogurt. There you go. This advertisement, or these exhibits, came from advertisements in Romania. Müller did a joint venture with PepsiCo in the United States, but it just didn't take. And eventually the joint venture was discontinued after 3 years. I think probably this was because the Germans just didn't want to get into the same family with PepsiCo's management, because yogurt is a very popular product. And I think that because of its success in Russia, it wouldn't surprise me if PepsiCo one day tried to acquire a dairy foods product or company. And here we conclude with this notion of performance with a purpose. This is Mrs. Newye's concept of what a company should do and be. It should be multicultural. It should appeal to multiple generations. It should have a global mindset. It should include diversity, inclusion, innovation, and growth as a result of those things. And so human sustainability, environmental sustainability, talent sustainability, performance with a purpose. This concept has spread throughout PepsiCo, and people in PepsiCo management are quite familiar with it. So now, finally, what's the outlook for PepsiCo? First of all, here are some financial exhibits that simply indicate what you would expect. Increasing sales, increasing profit margins, decreasing debt, and rising equity because of rising profit. These projections and these trends were obtained from the Value Line Investment Survey. So this is the opinion, recent opinion, of a Value Line analyst, a qualified financial analyst. The real question is, how does PepsiCo do this stuff? How do the sales grow from that flat declining trend to increasing? How do profit margins get richer? Invested capital, again, will stay the same because equity will go up while debt goes down. The leverage ratio, even by 2021, will be over 50%. It'll be 58% according to this analyst. In my opinion, the analyst is wrong. I think PepsiCo's directors are going to demand that that leverage ratio gets down to 50% sooner than that. Return on invested capital will go up because profit goes up and capital stays the same. Return on equity will go down because shareholders' equity will go up. And so the equity will go up faster than profit, the operating profit. All right. So issues. What does PepsiCo have to do for this growth forecast to be realized? The Russian economy is going to have to grow faster than in previous years. The sanctions on the Russian economy will have to be lifted sometime. When that happens, I see PepsiCo going into high gear in Russia. And PepsiCo has already indicated that it's going to invest another $1 billion in Russia this year. PepsiCo must capture larger shares of the Indian and Chinese markets. No doubt about it. Those are the two growth markets of the world. They're the big markets and they're the growth markets. It's got to continue to introduce these good-for-you products that appeal to health consciousness. Does it need another big brand? You know, when PepsiCo got Frito-Lay, there was an explosion at PepsiCo. Gatorade. Mountain Dew. These things made big differences. When is it going to be time for PepsiCo to get another big brand? And if so, well, what kind of a brand, what kind of a product will it be? The leverage ratio has to come down. Until it does, PepsiCo probably cannot be as aggressive strategically as it would like to be. It could solve that problem with a stock issue, by the way. What are its problems and opportunities? Health and wellness, clearly with obesity and overweight being as widespread as they are in this country and elsewhere, it's a big problem. So, good for you products. A dairy product line. PepsiCo's already got Wimbledon in Russia. It's the largest dairy products company in Russia. It can easily, when the sanctions are taken off, extend its distribution beyond Russia into Europe. Even though Mueller, and by the way, Mueller is misspelled, I see there's actually a little double dot over Mueller, but I couldn't do that. But that joint venture didn't work in the US. But I don't think that is an indication that PepsiCo should not consider acquisitions. There are, in the dairy industry, there are some beautiful companies that might be approached. Kraft is one. Trying to think of the other one, but there are 2 or 3 large dairy companies that just might be available. In India, a big opportunity, and PepsiCo has already indicated that it intends to invest about $5.5 billion in India by 2020. In Latin America, apparently that ready-to-drink Starbucks drink is very popular, and apparently there's quite a good market. The water should probably be way up there at the top. Water, as you have seen, has been growing. The consumption of water, bottled water, has really been growing. The real question is, how do you keep it growing? Do you fortify it like Life Water, which I think is a really good idea? Do you flavor it? Do you make something like the healthy drinks, Kavita, that we saw earlier? And of course, the declining consumption of carbonated soft drinks. Is this really where PepsiCo wants to increase its advertising? I think it probably needs to increase its advertising in some of those areas that are growing and the product lines that are growing. So the challenge: more healthy products, China, Southeast Asia, India. Some next big thing, a dairy product acquisition line, and who's going to be the next CEO? Here again, Mrs. Nguyen, 63 years old, and people have been saying she's wonderful, but when will she retire? And in August of 2018, she gave people the answer. She's going to retire at the end of 2018. And in fact, the new chief executive will take his position in October of 2018, and Mrs. Nguyen will remain chairman of the board until, at least until the end of the year, just to coordinate matters. No wonder she's smiling in that picture. She says, finally. I'm not going to read this to you. This is these are extracts from the announcements about PepsiCo's next CEO. His name is Ramon Laguarta. I'm sorry I dropped his first name in this announcement when I was paring it down. But he has been chief executive of the PepsiCo's Europe and Sub-Saharan African divisions, if you remember the organization chart. He also was president of the Eastern European division. He previously was an executive at Chupa Chups, a company in Spain. It's got an MBA from a well-known business school in Spain and a master's in international management from the Thunderbird School in Arizona. I'm well aware of it. It's international. MBA is it's a master's in international management, but it's an international MBA. Speaks English, Spanish, Catalan, which is a Spanish dialect, French, German, and Greek. What do you get from this announcement? PepsiCo's directors have made it clear the premium on PepsiCo's growth is international. Domestic will still be important, but the future for PepsiCo and the future for PepsiCo's growth is in its international business and its international marketing. Ramon Laguarta, and this is a statement that was put out by the current chairman of the board. Danielle Vasella, chairman of the nominating committee. Ramon is a strong and proven executive with outstanding track record, growing organically and by acquisition some of PepsiCo's largest and most important international businesses. He keenly understands the evolving needs of consumers and customers and the trends affecting our business and markets around the world. And there he is. So I think that you can now appreciate with me, first of all, you can appreciate that this briefing is finally coming to an end. But I think you can appreciate with me that PepsiCo is an ideal company to study for its international business, both in the past and the future. PepsiCo is a very complicated company. And why is it so complicated? Because it has so many businesses in so many countries, and those businesses make so many products to appeal to so many cultures. So PepsiCo is the ideal company to study in a course on international business, which is why I have asked you to watch this very lengthy lecture. However, I am going to end it now. Thank you for watching this briefing on PepsiCo. I hope that aside from being exhausting, it's also been interesting. And I hope you've printed off the PowerPoints so that you can use them to study for the exam on this company that will come at the end of the course. Goodbye.